Good afternoon. I trust everyone's caffeinated now, so we'll get started. We have quite a varied panel here. We have a digital banker on the far end, a branch banking specialist from a traditional bank, a payments bank, and a savings bank specialist. So quite a varied set of individuals to get the juices flowing and thought flowing. But let me kick it off. Let me kick it off with a little bit of a story. The story goes that I was speaking to my daughter. She's only 8 years old, and was telling her I'm going to the bank. And she knew that I had come from a banking background and said, Dad, what's a bank? Because what I realized during that conversation, unlike when I had gone to a branch with my parents, she's never been to a branch with me. And I have never gone to a bank with my children. So it's a very unique experience. Her view of the bank is me transacting on the app on the phone, and has never seen me walk into a branch. So with that story, I'm going to turn it over to each of you, and maybe start with Deepak on the end. The topic is Bank of the Future. What do you envision as that bank of the future? I give you a perspective of my child, and what is the future timeline? Is it a timeline? How do you know when you've hit the future?
I think you have started with a very tough question. First is, how do you define future? I think anything which is not at this moment is all future, right? What happens an hour from now is as much future as what may happen 10 years from now. It's our ability to see how far in the time zone we can imagine, and we can put some concrete thoughts. I would not hazard anything more than 24 months to 36 months when I look at a future from a digital era, because everything changes every moment, and at times a month looks like a year. But at the same time, mindful of the fact that we underestimate a lot of things in long term, but we overestimate it in short term. Between the two, I would say, I think the banks are moving from two different trajectory. There's a run the bank, which is the model that has been in for many, many years, which is your branches, ATM, call center, and obviously more of internet banking and mobile banking. Traditional products like your lending and deposits and investments. I think for a country like India, and India is not one country, I think let's be mindful of the fact. When you look at India, there are three Indias, at least the way we see it. There is a millennial or those who are probably the metro male millennial India, which is a very, very different kind of a mindset and a behavior, to probably a metro women and semi-urban India. So even in Mumbai, you will see two Mumbai. It's not one Mumbai, it's one city. Because there are a lot of people who have moved into the city from other parts of the country. They are migrants. They probably are staying in the neighborhoods or catchment where a lot of their habits are unlike probably someone who was born, brought up, and is a hardcore metro. So as we look at different India in a country like ours, I think the banking behavior will be different for different set of customers. So traditional banking, in my view, will continue to grow. It will become more efficient. It will become more like a bionic bank, or what we call phygital. That means there will be human and there will be technology, which is what we call tech and touch. There will be physical infrastructure in terms of branches and ATMs, but increasingly they will connect more to the various devices like your mobile, online, IoT. So it will have a tail where technology will play into the hardcore infrastructure. It will continue to give loans, it will continue to issue credit cards, it will continue to issue debit cards. But then each of those will become far more integrated again with technology, like we already saw today. With some of the banking apps, including ours, you can change your limit of a debit card or a credit card. You can decide when to activate or deactivate, where to use it, use a tap or pay, or probably use your phone to pay for credit. So I think a lot of these technology embedding into the core banking will continue. However, what we will see as a new part of banking, and which is where I think a lot of times we are all doing crystal ball gazing, is about how mainstream would AI-led banking experience be. Will you have a time, it may be 3 years or 5 years, but my prediction is the mobile app, which is probably the mainstay of the way we engage with a product or a brand, may not remain the way it is. You will have a bot that you will talk to, and things will get done. I think we all love speaking rather than typing. Humans are not designed to type. Building a voice interactive, assisted, bot-led banking is where I think the future is. You will have a banking more like a Google search bar. You ask something and it gets done. You don't have to browse, seek information, do things. So it's just a matter of time. I'm not saying that 3 years or 5 years, but yes, whether it will happen, answer is yes. How important data and AI will play a role in machine learning, I think it's going to become extremely, extremely powerful, be it in terms of credit, underwriting, fraud, security, ability to understand the intent of somebody committing a fraud. I think today the intent part is not established unless you just go through a credit bureau reports and some of the traditional ways. The lending cycles will become very, very short. So you will not write a credit for 2 years or 1 year. You probably will look at your exposure and your limit and credit in a much shorter cycle because data will provide that ability. So I think banks will become efficient. It will continue to offer multi-channel. Banks will become like multiple layers, meaning different things to different customers. And most importantly, banks will not do everything themselves. I think I see a very, very strong drive already in that direction. Banks will figure out, and they have already started to figure out, how to participate in a collaborative ecosystem. There's a value that an e-com company, or there is a value that probably a data company, or there's a value that a fintech or a technology provider is bringing. And not necessarily all of them want to work as a vendor. They all want to work as a partner. That means together as you create value, there is also a revenue sharing model. Banks will have to leave some money on the table for the ecosystem to come together and partner. And I think you will start seeing banks morphing more into consumer companies as we look at future. And they will play more and more role of customer centricity. Question is, will all banks be able to do it? I really can't say. But directionally successful banks, yes, that's how they will become more relevant as we look to the future.
Great. So Ravi, as you answer this question, you have been living the branch for most of your career. Can you add the flavor to, as you think about the future, the bank of the future, what about the branch?
Okay, it's very interesting that the conversation moves from the provider to the user in terms of what I would look at on a day-to-day basis is each one of you who's sitting here in this forum. I think the way in which this entire development is going across is that we are moving from a transaction to an engagement philosophy. Moving from a conversion-led, dialogue with a customer to a conversation-led dialogue. And conversation and dialogue are being used as two separate entities because the customer increasingly is wanting to be in control and yet want to be connected. And being in control is in terms of his time, his place, his methodology, but connected, we must understand the context in which we are with a customer. We are in India. You can call India, you can call it Bharat, but at the end of the day, culturally, the customer of a branch of a bank continues to want to have the touch and feel. And therefore, contextually speaking, he's considering all these elements which are evolving on the digital platforms as conveniences. Conveniences lead to benefits. Mm-hmm. And the customer is taking over that element of benefit and yet wanting to say that, hey, I do want to reach out to you when I want to. And therefore, can you provide me that kind of space? Can you provide me that kind of platform where I can come across and have a conversation? The difference earlier was that the customer had to come to the branch, in a particular time frame because it was transaction led. But today, he does his transactions but chooses to come and meet up with a branch manager or a bank personnel at his choice. And therefore, if you see, today's branch is evolving from being concentrated in delivering transactions to creating spaces of conversation and discussion. And increasingly, at least I can speak for our bank, and I think I speak for many other banks, that the physical premises is slowly evolving into discussion areas, into conversation areas more so, and reduction in the transaction spaces. And that, I think, is the way it will go. Yes, there will be continuous evolving of the channels and methods in which you reach out to a customer. There will be moderation in terms of such touch points on the physical side. But increasingly, given the context of the cultural milieu of this country, the customer, she certainly wants to have a suggestive conversation. Yes, I saw these loan rates which were available in, let us say, various websites. And I want to make a decision, right? But still, if I want to take an auto loan, remember, the customer of this country wants to have the choice of color, wants to have the choice of the day on which the car is delivered, wants to have a touch and feel of the car, wants to get a test drive done with family, right? So the physicality of the availability of this interaction will continue to determine the bank of the future, the branch of the future, the elements of interaction. Yes, we used to call a banker personal banker. But we must remember we will continue to call that banker a personal banker because of digital, data, computing speed, making it even more helpful to make the choice of the customer personalized. And therefore, this combination and this coming together or confluence is what is going to be the future. Future can change tomorrow. Future can change 2 years from now. But that eventually is the roadmap of the future that we envisage.
So Rishi, your bank has come in at a much different age with a very specialized product. And are you already thinking about that future? And what does the future look like for you?
I think we have come at a very opportune time, if you ask me, because a lot of technology advancement has happened over the last few years, and Aadhaar has become the main frame on which the entire banking is now being developed into the future. Just to add to what Ravi and Deepak has been saying, I think I agree with most parts of it actually, because where I look at as Fino, as our bank, we look at the Bharat as the major business for us, then the India. Even in Mumbai, as I said, there is a Bombay and there is a Mumbai. So we cater to more Mumbai, then we cater to more Bombay. The way I look at the banking evolving for Bharat or for the mass market segment, we largely talk about the top 300, 400 million people in the country. But there is a very big market around 400 to 500 million people who earn between 2 to 5 lakh rupees of income. And they are also seeing a lot of these changes happen in the last few years, especially on the technology, the branches and everything else. We believe in the future a phygital kind of an approach. A physical and a digital approach will actually prevail. Branches sizes will come down. We have already started seeing from 2,000, 2,500 square feet branches to 500. We have set up 500 branches which are about 200 to 400 square feet. So people not necessarily come to do a transaction, as Ravi is mentioning. They want to engage and they want to find out more about the products and everything, because 70% of our transactions are also happening outside branches, and a lot of it is actually happening on digital platform. So people are moving away from coming to branches from a transaction point of view, but digital is something which will coexist along with physical. And as we look at the journey of the mass market, the Bharat journey, we feel there is a lot of hand-holding which will be required. So it will move from an assisted model in the first couple of years to a digital model. Personally, I believe that we have to give all the choices to the customer. Let the customer decide whether he wants to come through a distribution or a physical network, whether he wants to come through a digital network. In terms of the future, when I look at, I see distribution going to become one of the key things for the banks to deliver. And distribution does not mean that you need to set up branches per se. You need to set up, maybe like we have a tie-up with BPCL. So we are setting up branches in various BPCL outlets. So it could be a distribution network which could be outside the branch. Doorstep banking is another concept which we are seeing. A lot of it is coming in the Bharat context. We see a lot of that thing moving from pure branches to a large distribution network. We also see sachet products becoming more and more prevalent. People will move from buying maybe a 1 year insurance. They might just buy a 1 month insurance. There is an event which is happening, so they might buy a 1 month insurance. We already see that when we go abroad, we buy a travel insurance for those 15 days, 20 days. So those kind of products will come, which will mean that the cost of the product will come down. You will probably cover a particular event in your life which is going to happen. So a lot of those things will come up. In terms of collaboration, something to what Deepak was also mentioning, I think there's a lot of debate which has happened around whether fintechs are competition or fintechs are collaborating with the banks. I see in the future, fintechs and banks will collaborate more. Just to put some things in context, there is World 1, which was pure banking as such. There was no fintech companies, say 3 years back, and everything used to be done through the banks, and the banks used to engage with the customer. Then we had a World 2, where we saw a lot of closed loop systems like wallets and other companies coming up, and somewhere the payment business or the P2P business of the banks actually to some extent moving away from the banks to those closed loop wallet systems. And then now we are seeing World 3, where the banks are working actually with the open loop systems like UPI and others. So the money is in the bank, the bank is aware where the money is getting consumed, what the consumer is trying to do. Money is not moving out of the bank. So for a bank, the World 1 is a perfect bank in terms of they have a full control over the customer. But I think those days are gone now. What is going to happen in the World 3 in which we are currently, we will see a more collaborative approach with the banks. The banks will open up, especially the new age banks, like we have a lot of tie-ups. In fact, internally we say that for the success of a payments bank, and especially for us, DTP, as we call it, distribution, technology and partnerships, will play a very, very important role. So I see that emerging in the future. So it is going to be, end of the day, it's going to be consumer. The customer will decide. And bank will have to provide all kind of services. I also think it will become like a FMCG kind of a consumer-driven behavior, where banks will be manufacturers of a lot of products, but the distribution or the sale will happen through a lot of fintech companies, and the primary and the secondary roles will be played separately as such. So from a consumer point of view, I think more and more convenience, simplicity. One thing which we need to work upon is security, which will become more and more important, because as the power moves from a bank to the consumer, you need to make the security more and more relevant.
Yeah. So I'm picking up on the point Rishi made, Bhaskar, as you talk about other people coming into the banking product, right? So sharing that revenue. As you think about the bank of the future, talk about a little bit about also how you see the community lending playing out. You know, the crowdfunding, or for that matter, if you're talking about friends and family or small loans being dispersed with an aggregate view from different individuals. How does that play into the future that you're thinking about?
See, this used to be the past, when it used to be community lending and all of that. The way things are really happening, in my view, we operate in a segment which earlier used to be called the niche segment. But that I think is becoming a large main segment. So the real banks are technically now playing the niche, and we are playing the large ones, which was unbankable some time back. So what we saw happening or seeing to happen is that it was happening gradually, and suddenly we are seeing it happening suddenly. So this is where I think ability to understand what's really happening becomes extremely important. For lack of any other analogy, I would say that what was happening was a BlackBerry platform, BlackBerry Messenger. We were all comfortable, we liked it, but you needed to own a BlackBerry to use the BlackBerry Messenger. And then come the WhatsApp, and everything else changes. We all dumped our loyalty without even us realizing that we are dumping it. So the banking as such is becoming from product, closed loop, I hold. Sorry to kind of not meaning any offense to the established incumbent banks. It's just that substantial amount of banking was happening by lethargy banking. I did not like my bank, but I did not want to move because I was reasonably sure the other bank's experience itself is not going to be good. So I have in a bank, in a large private sector bank, my salary account for the last 20 years with, I think, a reasonable balance year after year growing. But if I want a loan from the bank, you say that no, digital, you apply. Then comes a call from the call center, "Aap Bhaskar hai kya? Aap personal loan chahiye kya?" I mean, the experience itself is completely a drop down from saying it is digital to, again, starting all over in terms of last 3 months salary slips. What it is going to become for sure, at least in our customer segment, I'm sure for everybody, is that it's going to become now an experience from a product sale. So you want the bank, many times you ask that, no, what does the customer want? Probably many of our customers do not actually know what they want. It is the responsibility of the bankers also to be responsible decision makers for our customers. As long as I don't, even today we all talk about cross-sell. We talk about from the point of view of a provider. What is really required will happen in the banking is that we'll start buying products for the customers. So that itself will be an experience. That is what the bank of the future, whenever it happens, in 2 years, 3 years will happen. What is also not going to be acceptable is that people would expect a lot more transparency or rather complete transparency from the banking provider. So you will get, when you go to any website of a bank, you will get to know what are the deposit rates. Go to any website of a bank, do you get as transparently what are the charges and what are the lending rates? Usually we do not. So that would change dramatically probably as a bank of the future. It's going to be transparency. It's going to be, as Rishi said, complete simplicity. And in my view, it's also going to be wanting to be or displaying a sense of ownership for decision making on behalf of the customers, at least the customer segment we operate in.
So I'm going to come back to you, Rishi, on the notion of the mass market customer. Is there a sense of responsibility to the country to say, okay, inclusion is extremely important, so we need to revolutionize the way we bring people into the banking sector and banking and savings overall? So how are you thinking about product, and how do we leapfrog to get to a point where we bring a lot more people into the banking sphere?
Actually, if you ask me in terms of, there is a lot of things which have happened in the last few years, especially with Jan Dhan, the Aadhaar and the mobile trinity as we normally call it. What has happened and I've been traveling a lot in the rural areas, I think one big thing which has happened is because of demonetization and now with GST coming in, people have become more aware of the banking ecosystem and the need for banking. We are also seeing with GST now coming in, initially there is some resistance, but over a period of time, we feel a lot of those customers will actually, and especially for the MSME market, we feel a lot of them will come into the banking ecosystem. When I look specifically from a product perspective, see that comes from the DNA of a bank. Like we are focused on a mass market segmentation. We believe our products will be only devised, designed for that purpose of the mass market segments. And our compliances, our risk, our technology, our cost, everything has to be seen when we look at the product per se. So everything will be taken into account so that the cost of delivery, the cost of transaction is very low. The moment you come to a full-fledged bank, they cater to everybody in the industry and largely the upper middle class and above, or the middle class and above. And they will devise products which will be used for a particular class of people, may not be relevant for this class of people. So the products development will have to happen in that category of customer which is there. One big thing which is there, and a lot of times we actually miss that, is we keep on talking about digital, but India is a cash economy. And we have seen the latest reports that the monies in circulation has again become 17 lakh crores or whatever it was. So that money is again come back. But when I go to the rural India, I hardly see money in ATMs. The ATMs are not working. People are starved for cash as far as rural economy is concerned. So a lot of these new products like micro ATMs or Aadhaar-enabled payment systems are actually taking out cash from people who have cash to people who don't have cash. So a lot of these transformations, silent transformations which are happening, which we are not really aware of in urban areas, is happening in the country. Like the tie-ups with petrol pumps, they have so much of cash. We are able to tie up with them. The person actually does come to a petrol pump, withdraws the money from an ATM and micro ATM and goes away. It removes the problem or the cash management problem of the petrol pump also and gives the money to the customer. So those kind of new things which are coming up in the mass market segment. So if we are able to remove the problem of cash, we'll be able to solve a lot of those problems.
So we'll open it up for questions. If there are any questions, please do raise your hand. There are mics that are moving around in the front.
There is this mic which is here. Should I give this to you?
Hi, this is Malini. I have a couple of questions for all of you. One is for Deepak, is use of AI. I think a lot of information about customers is being used at this point of time to assess credit quality using various other parameters compared to the credit score alone. So what, whether it is social profiling or it is AI. So Deepak, what I'd like to know is that where does this information come from that banks are using, which is not necessarily from credit bureaus? And are there privacy issues that over a period of time customers will want addressed? That's one for Deepak. For Rishi, I have a question. Rishi, I'm aware that you're doing some very interesting work with Mother Dairy, dairy farmers. It's a pilot that's going on. Over a period of time, do you expect banks to sort of cater to various, identify their niches and segments? Because the behemoths are not, this whole thing about everything for everybody may or may not necessarily, be the cookie cutter rule may not work. So is the future going to be that, if I'm in a particular, this whole community banking, regional banking, is that, which has been very successful in economies like the US, do you see that coming to India as well? And the question for Ravi I have is, sorry, I'm asking, I'm just greedy. For Ravi, I have is that, many years ago when the dot-com boom happened, the Egg Bank was launched by Prudential, if I'm not wrong. It was to be an all, online bank, no physical branches. Do you at all see that happening, or bank branches will become like showrooms where people can experience, technology, people can sort of engage at a different level, and it's not necessarily transactional. So what is a branch of the future going to look like? Will there be, robots, whether they be human beings, or it'll just be like a showroom where I can just go and, shop for different financial products, etc. So if these are three questions, I'm done.
Maybe we start with Deepak on the end first.
Okay. So I think AI itself is not a new concept or a phenomenon. This has been around for decades. I think what has made AI more relevant, exciting, and immediate in terms of benefit of all the other tech stack is a large availability of data pool. I think if you look at it today, 90% of the data that we are talking about is generated in last 2 years. And the amount of data that is getting generated every single day is more than the amount of data that got generated in years together. So I think that's the first reason why AI has become so much talked about and near real term kind of a benefit. The second is with data, the ability to store this data, make sense of this data. Outside few large platform companies was probably missing. In last decade or so, and more so in last 2 to 3 years, a lot of banks, including us and other enterprises, have started to invest massive amount in building the data warehouse and data lake capability. So ability to bring in data and ability to make sure that all available data is first ingested is there. Now comes the question, once you have data, what do you do with this data? And that's where areas like quantum computing and AI and machine learning becomes extremely relevant, Because now your normal computing in the way you used to run your algos in form of tables and columns is just not going to work. So because you're also bringing in so much of real-time data. Now, what has also happened is while banks were data rich, more on the transaction data side, today the data ecosystem is not just what banks have access to, but around this entire consent-based architecture that's going live, the DEPA, which is a digital empowerment and protection architecture, which will enable that your data remains yours, it's anonymized, it's encrypted. However, you can share that data with a provider basis consent. It's similar to what in European Union now they have got the new data protection guideline. So I think availability, awareness, intent, and the platform is making sure that first you can make real sense of a lot of data, either yours or a third party. For example, a social data, a telco data, a shopping data, a GST data, your tax filing data, and all this data today is sitting at different places. All this data will be available very soon at a place, and obviously as an owner of data, you as a consumer will decide what data you want to share or not. People cannot take unauthorized this data and do something around it. So privacy will get taken care of. Now, building an AI layer on top of it, the use cases are manifold. So as a customer, when we talk about, and I said banks will become consumer companies, that means it's not people like you that some of us used to talk that recommend. You are individual in yourself. There's nobody like you. And I think that is what the power of AI and data does. That how do you micro segment, which is n is equal to 1, and say that around you, what can I do? And building those personas, building those kind of intelligence, be it at the point of conversation, be it at the point of empowering somebody who's having conversation with you, be it at the time of loan or a credit or a underwriting or making a next best offer to you, or even in terms of what is the likelihood of somebody defaulting on a loan or a credit, or which customer probably has a higher propensity of a risk, because maybe the device through which you are accessing banking app itself is compromised, or there is a malware, or you are using an IP which I do not recognize, or a transaction behavior which is unlike your normal transaction pattern. Now, moment you bring all this data in, then you use AI to take a decision and say, how am I going to find use cases? And I think today already we are seeing 8 to 10 such use cases, both customer facing and at the back end, where AI gets used.
So the mother dairy, the dairy example, we were part of the NDDB project about 5-6 years back, and we saw that there is a big problem around the fact that a lot of these pourers who come actually, they are paid in cash. And there's a lot of leakage which is there in the system. The dairy companies also had that leakage ecosystem which they wanted to plug. Plus they wanted that the money, whenever the dairy companies give the money to the pourers, they should get it immediately. So that is a big problem, and that is a similar problem with NREGA payments and a lot of government payments. And we have seen with Aadhaar actually plugging up that gap. As per the government estimate, about 50-60,000 crore rupees they've actually saved by plugging that gap. So when we started this mother dairy project, and I think this kind of regional, I think your question was more in terms of do we see specific regional players, cooperatives, a neighborhood bank, a community banking kind of concept coming up, very similar to what is there in US. In US, there are thousands of banks compared to limited banks which we have in the country. I see this kind of products actually being taken up by some of those community banking approach which is there. In fact, the cooperative banks and RRBs were formed with that particular objective of service that particular community in that particular region. But to some extent, they have not been able to meet that entire purpose for which it was set up. So the RBI document also of the futures talks about niche banking, differentiated banking. The licenses which have been issued to small finance bank also is been in particular regions. If you see, some is north, some is in south, some in particular state. So the idea of RBI and the way the direction is that we need to focus on differentiated banks in a particular area, in a particular community, so that banking can be made available to them according to their own convenience. So I think the way the ecosystem is evolving, you will see such kind of products coming up from some of the banks, plus the banks will also become very, very regional focused, and you will see a lot of migration happening from the cooperatives and RRB customers to such kind of differentiated banks, because they will be bringing technology, digital, plus the convenience of any other big bank. So I think the ecosystem will evolve in that manner.
Yeah, in terms of looking at the kind of branch, so let me try and give you a perspective of what this country is. So we had a multinational company do a survey, country-specific survey, and let's bifurcate it into the individual banking, the commercial or the companies which bank, and of course the cash segment, which is the MSME and all that. Now, interestingly, the question that was asked is that what would be the element which will determine the bank or the branch that you would bank with? And one of the critical elements was the proximity of a branch. So today, we are sitting in a country which purportedly has a huge adoption possibility and degree for digital, and yet if 70% of that survey sample was individuals who were asked this question, they continue to peg a critical element of their choice of banking to be the proximity of a branch. So what does that tell us? I lost my, sorry. So what does that tell us? It tells us that yes, the customer, she will adopt a means to do her banking at her choice of time. But at the same time, she wants to be in a physical space which gives her the comfort as well as the convenience of having a conversation. And therefore, there are multiple things that we are trying out. We had the watch banking, we had missed call banking, we're now trying out on gesture banking. All of these are elements that will be part of the journey and the roadmap that all our banks will lay out for the customer. But at the end of the day, the branch of the future will not be too different from the branch that we see today. For example, we tried out what we call as milk to money as part of community banking. You must know that about 58 or 56% of our banks is in the semi-urban rural areas. And therefore, something like a community banking works, where we had branches which were catering to geographies which had milk farmers. And in terms of the complete straight-through processing, the branch was able to create that connect between the hub where the dairy had its pouring capability, and the farmer could take out money at the other end of the line. So these are elements which determine what individuals want. After all, these are journeys that each individual is doing. And as Deepak was talking about personalization, yes, data, computing, and medium will ensure that this hyper-personalization also determines how they interact with a service provider. But at the end of the day, given, as I said, the cultural ethos that this country has, whether you call it Bombay, Mumbai, Chennai, Madras, Kolkata, Calcutta, Gurugram or Gurgaon, right? At the end of the day, the customer wants to have a touch and feel, and I don't see that going away. So rest assured, the branches of the banks are there. There will be moderation. There will be elements of community. There will be elements of regional flavors which will come in. Maybe the branch of tomorrow will welcome you with banana leaves, arches, catering to a geography or a culture. But that physical branch will still be there. They will give experiences. So you walk into a branch and they will provide you means, platforms, methodology to engage with the service provider in a non-physical way. So again, assisted digital, right? Please understand that our rural folk adopt digital banking, as we all call it, in a much higher degree than the urban folk. And the digital banking, it's in terms of how you reach out to him. Our missed call banking, which allows you to do 7, 8, 10 transactions, which are routine transactions, without coming into a branch. And that missed call banking is something people adopt. E-commerce, I mean, we all know e-commerce across the country has picked up, and a bulk of that business happens in the upcountry geographies. So the branch is going to be there. The branch will have methodologies which will change. Maybe the people in the branch will be skilled differently to interact with this customer of today or tomorrow, and therefore ensure that the entire ecosystem creates more value additions rather than value attritions in terms of a physical branch.
So I think we'll sum it up by saying customer in control, right? So the Bank of the Future is really about the customer at the choice, and they're in the control seat, right? So I want to thank the panelists. We have, as I said, a very varied a group, everyone from digital, traditional branch, to specialized payments and savings banks. So thank you all. A round of applause for all our panelists.